Well, joining me now is John Kernan from TD Cowen and our very own senior retail reporter, Courtney Reagan, here as well. Guys, welcome. John, tell me, what's the problem with this deal here? It seems sort of like Cheesecake Factory buying Burger King, where you got kind of like a big box versus an in-mall or more urban brand, or like Club Lacrosse buying pickup basketball. You've got the performance brand and you've got the culture brand. I could see ways this could work, no?
It's been a busy few weeks of M&A in the sector, and this one lacks strategic and financial sense. We did downgrade Dick's today to hold after a 5-year run we had to buy on it since 2020. The stock quadrupled over that period, and the management team really executed on their strategy. I think that when you look at the deal today, they overpaid for the business. Foot Locker generates roughly $100 million in free cash flow. They're paying 25 times that. Foot Locker's been a no-growth to shrinking business. Should be valued closer to 10 times free cash flow. So they're going to put quite a bit of leverage on the balance sheet, and they're going to put quite a bit of risk in their strategy.
Courtney, on the other hand, I can come up with an argument that in the omni-channel world, where data is important, your urban data from the likes of a Foot Locker is going to be different from what Dick's Sporting Goods already has. There's this 30% international portion of the business that Foot Locker has that now Dick's Sporting Goods has access to. Is that not right?
No, yeah, and that's exactly what the executive chairman, Ed Stack, told me. He's also the son of the founder. He said, look, this gives us an international presence that we don't currently have. Foot Locker also has smaller footprint stores, no pun intended, in areas that Dick's might like to go, but that they can't quite put their full format stores, let alone these big house of sport concepts that they have. He's looking at some synergies, somewhere between maybe $100 million and $125 million. He says it'll be accretive in the first full year. But he really sees a lot of value here. He says it will help us deepen our partnerships with brands like Nike, like Adidas, like On Running. And I understand what John's saying about how Foot Locker has been a challenged business. And I asked Ed Stack, is that sort of why you're buying it now? Because perhaps you're getting it, quote, on sale, although John argues that they're paying too much. And he says, look, we've been having conversations on and off, and really it's heated up over the last several months. And a lot of what he believes were some of Foot Locker's missteps, again, no pun intended there, was that relationship with Nike through really no fault of Foot Locker's, when Nike said, look, we're going to pull back on the amount of inventory that we give some of our retail partners as we try to go more DTC. They've since reversed some of that. So, yeah, I can sort of see both sides of this, but I'm not the analyst, right? That's what it's John's job to kind of go through the numbers.
So, John, what does Dick's Sporting Goods have to do? What does Dick's Sporting Goods have to do to prove your initial impression here wrong? Does it have to do with their use of data, location data in omnichannel, how well they can build customer profiles, maybe how well they can sell through Dick's Sporting Goods type merchandise, share of wallet wise, into Foot Locker locations?
Yeah, they didn't talk to any revenue synergies. And I think the point here is Dick's was having tremendous success in footwear, and they were stealing market share from Foot Locker. So, and footwear has been the biggest driver of Dick's same-store sales gain and margin gains the last 3 years. So now you're significantly increasing your exposure to Nike. About 24% of Dick's inventory purchases were Nike pre-deal. That's going to go to 38%. So much more exposure to Nike, much different exposure to a new set of consumers. Certainly, Foot Locker is more exposed to streetwear, lifestyle, mall-based retail. Dick's is going to have to make some changes to the lower performing stores of Foot Locker, which there are many. They operate over 2,500 stores globally. Roughly 50% of the North American store base is mall-based. So Dick's is going to have to seriously think about store closures and reduction of real estate footprint for that Foot Locker banner.